Welcome to an introduction to accounting brought to you by Parkbench Tutors. This podcast we are going to look at how the accounting equation can be used to present a statement of financial position, which is sometimes known as a balance sheet. So let's just go through one of the terms, or one or two of the terms, before we begin. The net current fixed assets, right? Remember, these are, let's highlight that, items that are owned by the business and they are for long-term use in the business, which is why they contain or consist of things like buildings, plant and equipment, and motor vehicles. Other things which the business owns, which are going to be used in the short term or are cash already, are current assets. So they include inventories or stock, as is sometimes referred to. Inventory is, for example, when you buy materials to make something else which you're going to sell. So the purpose of an item in inventory is essentially that it is an item which will eventually be used to turn into cash. Trade receivables or debtors refers to amounts of money that the business is owed, so that also represents an asset of cash. And other receivables, such as prepayments, also represent something can be turned into cash. And then, of course, there is cash itself. Liabilities, if we remember from our accounting equation, liabilities are amounts that we owe. So current liabilities are usually taken to mean amounts that we owe and are payable or become due in the course of the next trading period, where the trading period is normally a year. Long-term liabilities, let's highlight those for you, are liabilities that won't become due in the next trading period or next year, but we will make use of them in the longer term because we've got to pay them then. And equity, of course, this represents an owner's interest in the business. So that we have assets, liabilities, and equity. And if you can remember, our accounting equation stated that assets less liabilities equals equity. The only term we haven't introduced here, so we'll do it now, is, we'll just highlight it in a slightly different colour, the net current assets. The net current assets is simply the figure which is obtained by taking the current liabilities away from the current assets. In other words, what we're saying by the net current assets is that's the funds that the business has available for day-to-day transactions. You may also see this referred to as the working capital. Right, so the other terms then in here that we haven't met, and so we'll introduce them now. Depreciation is a way in which we charge an amount in the accounts to write off the cost of an asset over its useful life. So we record assets at their original cost, so buildings would be recorded at their original cost. Then we would take away the depreciation to get a value which we can use in our statement of financial position. And exactly the same applies with plant and equipment and with motor vehicles. So all we've really done then is restated the accounting equation to produce a balance sheet. You will note that the heading says that it is the balance sheet or the statement of financial position for, and then you would state the name of the business, and it would then have to state a particular date. A balance sheet is a snapshot, if you like, of the statement of financial position on that date, right? It refers to a particular date. Thank you.